Good morning and welcome to the 14th farewell concert for the market prep, soon to be called the opening call. Today is Wednesday, August the 2nd. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus here is on seeking accurate context, always thinking about risk management and remaining patient in your trading. Economic numbers this morning. 6 o'clock, the mortgage rates and applications came out. The mortgage rates crept up a little bit. Last week, they were 6.87%. Now, 6.93%. The applications last week were down 1.8%. This week, down 3%. A little bit of slowing in the housing markets to be expected. At 7:15 this morning, the ADP employment report came out. Now, if you remember, last month, they more than doubled the expectations. That has been cut from 497,000 down to 455,000. However, the expectation of 189,000 today came out a lot higher at 324,000. The ADP sees a slowdown in pay growth. However, the healthy labor market has been supporting household spending. We are still waiting for the 9:30 EIA petroleum status report, which promises to be a questionable one after the API announced a 15.4 million barrel draw in crude stocks here in the U.S. And so that is something we are going to be contending with as crude traders this morning. Now, you may have noticed we did not start Top Step TV today as planned. We've decided to delay the beginning or the start of that because we've got all hands on deck. The entire company is working to answer your questions, to support you. And as soon as we get things ironed out, this is going to be something that we hope you enjoy is, of course, Top Step TV. Now, we've created a web page. Here it is. It's the status update. If you have questions, if you are wondering what's going on, you can click on that link and it's going to tell you where we're currently at. And there's a lot of frequently asked questions on there as well. So if you have questions, first step is to check that page. It would be you may find your answers there, and that would help us get caught up on all of the support tickets and everything we are trying to get taken care of for you, for the traders. And again, I think that's a really good idea for us to put that up there. And again, you may have your questions answered just by checking that status page. Today is Wednesday. We will be having group coaching. I'm going to put the link into the Zoom meeting. If you're not already registered, you can register at this link. There you go. So what are we looking at here this morning? Well, if you haven't already checked the news, you're going to find out now that the U.S. stock futures dive that we took last night was directly related to a credit rating cut by Fitch, one of the top three credit rating agencies. They've taken us from AAA to AA plus as far as a credit rating is concerned, citing rising U.S. debt and lower confidence in leadership in Washington. Many economists, of course, are questioning this move. So again, we've taken our credit rating from AAA to AA plus. Crude prices have also surged after a surprise drop last night from the API of 15.4 million barrels in inventories. And that's right after the U.S. has been floating plans to replenish the strategic petroleum reserve. So we've got crude oil being supported by some very fundamental information here. As far as earnings are concerned this morning, Humana, Phillips, Humana beat on both categories. Phillips 66 beat on earnings per share, and Kraft Heinz beat on earnings per share, but lost a little bit as far as revenues are concerned. After the close today, we're looking for Qualcomm, PayPal, Occidental, and MetLife, just to name a few. It is a very long list of earnings. Becomes a little bit confusing trying to use that fundamental information to look for any type of day trades today. We're going to look at the charts here very shortly and see if we can't find a little bit of context to put in these markets. There's a little bit more uncertainty in the markets, and it is showing in the VIX, which is 9% higher this morning, up at 1516 last I checked. The dollar index, also the U.S. dollar, took a nice ride to the upside after the API numbers this morning. It's now currently 102.4 last I checked, and we also saw a jump in the yield on the 10-year, which may also put some downside pressure on the equities, but largely they're still in the same market state they've been in. And again, we'll see that here very shortly, but the yield on the 10-year solidly above 4% at 4.06%. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and of course, love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. I want to put the link to that status page in here once again. This is probably the best place for you to start if you're having difficulties or questions in the current situation. So we are going to be, looking forward to spending a lot more time with you in Top Step TV. We've been preparing, and we are again hoping you're going to enjoy it. Sometimes trading is a little bit boring. It's nice to have some people around and some conversation and some things to think about while you are awaiting your profit targets or even awaiting an entry level, so an entry area, if you will. So we'll be looking forward to doing that. And again, it's coming soon. We just want to take care of. We got the whole company working on taking care of you, the trader, and we're going to get all this stuff as resolved as quickly as we humanly can. Good morning, everyone. It's great to be back with you this morning. Ed, thank you for joining. Tachyon, Duke, Will, good to see you. Caprice, Jims, Shaw Cunningham, Futures Trading Today, Trading Research, Nasdaq, Theo, Rusty, Golfer, my spirit animal is with us, Pete. So far he's saying Quantower is much better than Trade of 8. So, that glad that you've found a place that you like. The Rooster is here. He's watching, always watching. Thank you for joining us. There is no scaling plan for trading combines anymore, Trading Research. The only rule is that max drawdown. That's the only thing. Anissa, good morning. Travis, James, Manuel, Caesar, good morning. Jay, Robert, Josiah, it's good to see you back with me this morning. JT, Jason, James, good to see you this morning. You know what? I've been wearing these Top Step shirts. Usually on Fridays, I'll usually wear just kind of a t-shirt. And I will, if we do the prep on Friday, pretty sure we're going to be doing the prep on Friday. I am going to wear that Be Kind shirt. That is one of my favorites, of course. The Market Prep Final World Tour featuring Hogue, Ozzy, and the Dead. There you go. There you go. That would be quite the show, wouldn't it? Dan Trader, Barry Brooks, Anonymous Futures Trader. Top Step TV is something that we are going to be doing, and we've been planning, and it's going to be pretty much an all-day broadcast featuring live trades, live traders, partners of us, other traders coming in, lots of stats and information, and even a top quiz we're going to be doing every day. So we're going to have a lot of fun with this. And again, we hope that you really enjoy it. Trading Research, other than max contracts, no longer scaling plan for the combine. In other words, no more than 2 lots before X profit. Then no, the scaling plan is gone in the trading combine. Only rule is you can't hit that max drawdown. The other things like the daily loss limit, it's a soft breach. So if you hit the daily loss limit at 9 o'clock in the morning in the trading combine and you haven't hit your max drawdown, it's going to cut you out of the account for the day, but you'll be able to resume trading with no reset, no nothing the following day. All right. John, good morning. Anonymous Futures. Lance, good morning. FVB, good morning. I got lost. Where are we here? Andy, good morning. U.S. credit rating, instead of printing money, now they need to buy everything on layaway. That's pretty much what we've been, I think, kind of doing, kicking it down the road for quite some time here, Will. Richard, Pete, good morning. It's our pleasure. We're glad that we were able to get to you. Joe, good morning. Go down to go up. Yeah, you got to go up to go down too, right? 90-bit even. Dr. VJ TR, trading like a bot. Anonymous Futures Trading, good morning to you. TR, no code dad, good morning to you. Mr. King, yes, wow, you've been around for a while. You remember when Eddie and I were doing the Squawk Radio. You've been with us for a while, Mr. King. Glad to see that you're still with us here. Anonymous Futures Trader, Nathan, John, Miriam, James, Vikman, Miriam, Sean, good morning. And we're getting some of those are we looking to move into the October month of crude oil? Not just yet. The rollover for crude oil is generally somewhere between like the 15th and the 18th of every month. So the volume is still largely in the current front month, which is, of course, September. Okay. All right. Again, we're very, very happy to have you with us this morning, have you with us trading. Here is that link to that status update page. If you have questions about anything that's going on, that's your first step. Rational Investor, good morning. It's good to see you. Haven't seen you in a while. It's great to have you back with us this morning. We're just about to jump into the charts here and see what's going on. Why don't we do that? Let's take a look. So here's the E-mini S&Ps. Yesterday, volume was a little bit weak, but largely maintaining. The unique thing about yesterday in the S&Ps is the open interest. There was virtually no change in open interest. It tells me that, before the credit rating cut, a lot of traders were already positioned, they're already hedged, and they're preparing for the rest of the week's employment information. We know we have jobless claims tomorrow, and then the big one on Friday is the unemployment numbers. So we're going to be kind of anticipating that. So the credit rating cut that happened yesterday has increased in uncertainty. You can see it in the VIX, which is almost, it's 9% higher this morning. The fear factor jumping back into this market. But looking at the daily chart, where did last night's trade go to? It traded to last week's low. This is telling me that the market is still in an upside digestion market state. There's been no market state change here yet. No market state change here yet. So their context is still looking to trade, to look for those extremes for our bigger opportunities. Here is the 30-minute chart. So we know we opened with a gap between the 4 o'clock central close and the 5 o'clock central open because of that rate cut. All right. The market has looked lower, tested down to the weekly low. Are we holding any overnight inventory? It's a bit of a hard read. The market, opened, it looked higher, looked a lot lower. If we're holding anything, I would say we're looking a little bit to the short side in the overnight, weaker hands, short time frame realm, if you will. We are, with great probability, going to be opening with a gap from yesterday's narrow range to where we are now. So we're going to be looking at a little bit of gap rules. If we can't close this gap relatively early, I understand that is a subjective term, then we're going to be looking for opportunities to look for continuation to the downside. Now, looking back here at the daily, okay, for a short time frame market state break, we're going to need to see significant and meaningful trade below last week's low. Okay, last week's low, to be precise, was 45.5375. If we get below there and we spend time and we start building volume or even momentum, that will break the current upside digestion market state. But to, I think, seriously break the market state to the downside, we've got to see some participation down below 45.10. There's a little bit of kind of hints on this on the composite profile, which we're going to see here very shortly. Here's yesterday's profile. Take a look at the last three. Thursday, was that we've been sort of in repair of that for the last three sessions. All three of these sessions are very wide profiles. There has been a lot of facilitation of trade here. The market is likely to look for trade facilitation in a different area, which it seems to be doing now. We take a look at our overnight high, take a look at our overnight low. That's last week's low. So, and then, well, our overnight low down here, look where we are here. We're still sort of, in a manner of speaking, trying to repair last Thursday's emotional, toothy, unconfident downside move. Why was it unconfident? It didn't change anything. It was a big down day, big scary down day, but it didn't change anything. So our overnight low, last week's low, are going to be important levels for us to maintain the current daytime frame balance that we're in. Take a look at this composite profile. So 45.10 is weekly kickoff low. There are three distinct areas of balance: here, here, and here in this composite profile. These low volume nodes have a tendency to bring support if approached from above or resistance if approached from below. This area right here, right around 4,500 to 4,520 with 45.10, the weekly kickoff low, is going to be somewhat pivotal. If we can't hold this area and we re-enter this area of balance, that's going to change our market state, right? That's going to change things a little bit. Let's take a look at the NASDAQ. The NASDAQ was very similar to the S&P's yesterday because there was only a 400 contract increase in open interest. Okay. So, but what didn't we do in the NASDAQ that we did overnight in the S&Ps? We tested down to last week's low. The NASDAQ is actually holding up a little bit better than the S&Ps. Maybe that's some of the tech earnings. We know we have Apple and Amazon tomorrow, but for some reason the market is holding much better inside of its upside digestion market state. Remember, we have markets that are directional. Those are rallies, those are trends, and then the market falls into balance, consolidation, chop, whatever you want to call it. The market does spend more time in these areas than it does in directional trade. So just think about what you're seeing in your market. Look for opportunities to come to you. If you go looking for opportunities, you're going to find them. You're going to find them. Take a look at the 30-minute chart here. Overnight inventory. If we had to put a number on it, I would say we're short. The market opened here. It looked higher, looked lower, came back a little bit. So just the direction of the overall overnight market, we're looking at some pretty good short overnight, weaker hands inventory to the short side. We are, with great probability, opening with a gap. Opening with a gap gives us gap rules. If we can't close the gap relatively early, we look for opportunities in the direction of the gap. It doesn't necessarily make it any easier. It's just one nuance that I look at to say, okay, if we can't get this gap close taken care of pretty early, I'm going to be looking for opportunities to sell strength in this market. We have our overnight low in the NASDAQ, which would kind of represent full repair from the big downside scary move that we had last Thursday that didn't change market state. if we were to look at this, we could say that overnight we did some repair in this area here, although it was overnight low volume. So we may see the market try and continue to fill in this area in regular trading hours. All right, take a look at the TPO chart now. So yesterday and the 3 days before, a lot of trade facilitation would make sense even without something happening overnight, that the market might go looking for new areas with which to facilitate the trade. Remember, the market's job is to facilitate trade. If it runs out of the ability to do that, price will seek other levels to find more participants. So here's our overnight low. That kind of takes care of the repair. I'd rather see that happen in the regular trading hour session, but I don't get to choose. So, we had a normal variation, extreme day to the upside with an excess low and a weak high. Not necessarily a really weak high, but the excess on the low yesterday was greater than the excess on the high. But we're going to be opening with that gap. So if we can't close that gap, we're looking for opportunities to see this market rotate back to the downside. So what does all this uncertainty mean to the marketplace? I was looking here. The last time there was a downgrade in U.S. Credit rating was 2011. And the market really, knee-jerked around quite a bit, but didn't really crack as far as the time period after that. So expect some possible volatility, and then as traders have short memories, things may just go back right to where they were, or the market may just go back to where it was. Here's crude oil. So with the huge draw in crude announced last night, we had some pretty good kind of movement upside. It is now kind of coming off that high, but still finding potential support at weekly kickoff high. This is what I have been looking for, because it's been so magnetic to it for the past couple of sessions. If we can put in this low and see some continuation to the upside, there's opportunity there. Not that I want to see crude oil get more expensive, but as a trader, I'm looking for opportunities. We added 2,100 in open interest, and we did close the second day above that important inflection level, even though it has been really digestive there in short time frame. So is this marking acceptance above the weekly kickoff high, that the low of our overnight session is right there? Take a look at the 30-minute chart. So I guess we did not close settled, but by the end of the day, we were back above the weekly kickoff high here. One close on the other side, very magnetic towards it. What I've been anticipating and what I've been looking forward to is the opportunity to have a chance where finally there's going to be some sort of base here at weekly kickoff high and a directional move away from it. Overnight inventory, we actually are looking at short. We're looking at short overnight inventory, even with a big draw in crude stocks. We have to wait till 9:30 to see what the EIA says today. All right. Here is the profile from yesterday. Normal variation, neutral day after a normal variation, neutral day. I'm looking for this market to seek new levels for participation, for trade facilitation. So far, the market has opened and driven back into range. We're still looking at that 81.45 level as an important inflection level, if only because it allows me to limit risk. All right, here's gold. We had another kind of a dead cat bounce yesterday, and we're really kind of centralizing right now at last week's low. Yesterday, on this big pullback to the downside on decent volume, we lost 4,500 in open interest, and that's typical of when the market approaches an important inflection level. we've got a whole bunch of longs just kind of acquiescing and getting out of their longs so they don't lose all their money. So the volume was pretty strong. Open interest dropping, approaching a weekly kickoff low is actually taking selling power away from the market. Between last week's low and our weekly kickoff low is kind of a high target area for me. It's going to be tricky, but if we've taken out a whole lot of longs, we've taken a whole lot of selling power out of the marketplace. Keep your eye on the U.S. dollar. If the U.S. dollar remains to push to the upside, then we're going to be looking for opportunities, possibly for shorts, or looking at levels to find a base somewhere near weekly kickoff low for a trade in the opposite direction. If this market becomes directional, of course, you do not want to fight it. Here's the 30-minute chart. All right. So there's our credit rating cut. The market is still in extended trading hours inside the regular trading hour session from yesterday. So there's not a huge change in the perception of value of an ounce of gold at this point. Even though the dollar has been pushed to the upside, it's keeping us kind of in range and in value. Here's our kind of dead cat bounce yesterday. The B shape of this profile is supported by the loss in open interest in telling us that yesterday was a long liquidation type of day. So the fact that we're in range and in value gives me the opportunity to try and relax a little bit and look for better trade locations as the day goes on. As far as overnight inventory is concerned, maybe some really fresh shorts in this market, because we were here, we came all the way back to here, we got short, we reconciled, we're trying to get short again. So we're going to have to see how this plays out for the day here. Here's the TPO chart. Here's that B-shaped profile, which is supported by the loss in open interest. So long liquidation day. Long liquidation takes selling power away from the market. As we get closer to an important inflection level, keep that in mind. Here's our regular trading hour range, basically almost all of it inside the value area from yesterday. Stay patient. Better trade locations are likely to come as the day goes on when we see this. Okay, so let's take a look at the euro now, which this should be interesting. Another push to the downside. We're still largely range bound. In about 4 days, dollar's holding above 102. It's going to be hard for this market to rally if there is a strong dollar. So it has fallen into maybe day 4 of an area of balance with last week's low, the lower extreme of it. That may offer you an opportunity, again, if only to limit risk. Look at the volume the last couple of sessions. It's really dropped. And yesterday we lost 7,200 in open interest. A lot of folks just kind of dropping this product here until there's some sort of change, or so it seems. Here's the 30-minute chart. Opened with a 1 hour gap. Dollar's looking strong, so it's just been pulling off ever since. We know we have overnight inventory to the short side, and there may be some longer time frame traders in on this move, because that was a big thing that happened with the cut of credit here in the U.S. So, if we start to get nervous, if we can't take out the last week's low, there may be a pretty vicious move in the opposite direction here. But again, we got to keep your eye on the dollar. You got to keep your eye on the dollar. See what the dollar's doing before you do anything here. So a normal variation, neutral day yesterday. The market is likely to seek new levels with which to facilitate trade. We're inside yesterday's range, largely, somewhat inside the range from inside the value area from yesterday. We have excess on both sides. We have not left this area of balance yet, but I think it's highly likely. Direction, of course, unknown. Here is the 10-year. So rates back above $4. The price of the 10-year is going to go lower. Just a matter of how does it get there. Overnight high, weekly kickoff. This was another magnetic level that may have started a base at that important inflection level. If we can't hold last week's low, these swing lows would be an obvious visual target. Nobody has to tell you that. We're always looking to see those swing highs and lows. We'll see how that plays out. Here's the 30-minute chart. We lost 1,900 in open interest yesterday. It is supported by a B-shaped profile. Long liquidation, losing open interest. Remember, however, it does take selling power away from the marketplace. So we've got the market opening here, largely flat overnight in inventory, maybe some fresh shorts coming into this market. What are they looking for? They're looking for some sort of a move, continuation below last week's low, or a failure of that and a move back into the range, maybe another check back up to weekly kickoff high, which is basically the high of the regular trading hour range yesterday, the high of our overnight. It's been tested 1, 2, 3, 4, 5, 6, 7 times since yesterday. Take a look at the TPO chart on this now. So there's our B-shaped profile, lowercase b, long liquidation supported by a drop in open interest, but not by much. 1,900 in the 10-year is almost inert. It almost doesn't matter. So we're starting to see some downside continuation. Look at this market state, short time frame, regular trading hour market states, putting in lower highs, putting in lower lows, putting in lower highs. Yesterday, we have an excess high. We had a poor low. We've already tested down below that. So I wish that I could just sit here and tell you, yeah, this is where you want to buy it. This is where you want to sell it. But nobody, no matter what they tell you, is capable of doing that. So we're just trying to figure out the context and kind of put our head together as to, put together your hypotheses. Preparing for the trading day is of ultimate importance, right? Every time that I just sit down and I start poking and clicking, it usually doesn't end up well. If it does, it's luck. So we're going to be looking forward to seeing you maybe for a few more days here on the market prep before Top Step TV begins. We are going to be working diligently to get to every one of your questions, queries, and issues. Yes.
Preview a little bit of what Top Step TV might look like, but also to answer a few questions. Okay. Hi, everyone. So Chris had the question. Let me make sure that I'm getting this right here.
Good to see you, Jack.
Hey, it's good to see you too, Hogue. Usually just the voice. Hogue, if open interest in October contract is up significantly, and the current month is flat, is that a bullish signal for crude?
At this point in the rollover cycle, no.
Okay.
No, I don't think so. Right now we're looking at open interest in the September contract at 302,000, the October contract 103,000, and when you look at this at the bulletin, crude oil trades out for 10 years. So there may be things that we're looking at next March or February where we're seeing an accumulation of positioning, but I don't think that it's really that I'm capable of determining some sort of directional guidance from that. That's why I always look at the total number of open interest changes, because this market has open interest all the way out to December 2033.
Yeah.
Apparently we're still going to need crude oil at that time. So there's so much information. That's why I'm always collecting the total so I can see if there's a large change in open interest over all of the contracts instead of focusing on just one.
All right, that's good. I'll let you do your sign off, Hogue, alone so that you can do it. But just to everyone out there, once again, Hogue and I both apologize if we don't know the answers to some of these questions. As the support team's working very hard. We're all taking tickets. We've been posing these. We're trying to get through as fast as possible. When there's more news, we'll update you, but we're looking to get it sorted out very soon. So that would be my 2 cents on it.
And don't forget, that status page is going to be updated, I think pretty regularly. So that's really, I think, the first place to get your question answered. If you can get your question answered there, that would help us get caught up on all the support and all the tickets that we have. And we're gonna, of course, be keeping that updated. I just put that link into the chat again. Just click on it, check it once in a while. Maybe that's going to be enough to answer your questions. There are some frequently asked questions that are part of that status update. So check that out, and hopefully that's going to be enough to answer your questions. And again, we are working very hard getting all of this taken care of, because after all, this is all about you. We want to make sure that you are finding success and enjoying the process. So, well, Jack, thank you for joining me.
Yeah, I'll let you go on that. And just to show on this new thing here, we're going to have the information about how the trading combine participants are positioned here. So, for instance, we're long the Nasdaq right now. This is by people in the combine. All that coming soon, but we want to get through all this support stuff first. So we're going to dedicate all of our effort towards that, and then we'll have some fun with Top Step TV. But Hogue, I'll send it back to you.
Thanks again, Jack. Thank you so much. All right, folks, getting pretty close to the open here. So let's take our deep breath. Always remember to stay humble, grateful, creative, and centered in your trading. If you're feeling, on tilt yourself, make sure you get yourself back to center before entering. You got to be able to make good trading decisions. Hopefully we'll see you tomorrow back here on the prep. And we're looking forward to Top Step TV again. And I will hope for and work towards your success. Have a great trading day. Get out there and profit now. Trade well, and we'll see you later.